Good afternoon, dear students. Myself, Dr. Sukanya, Assistant Professor, Department of Commerce, KSOU, Mysore. Now, first of all, dear students, I'll be handling the subject Indian financial system, but due to some technical issues, I'm not able to upload the presentation. So I will send the presentation slides that has been prepared by me to the Telegram group. Now, dear students, first of all, let me clarify to you because most of them were calling and asking some doubts about the blocks. Please keep in mind that whatever material you have got in your students app, the entire all the blocks have to be studied for your each of the semester. That means to say for the first semester itself, whatever blocks have been given to you completely, you need to study all the blocks for the examination. So your hardcore paper, dear students, is having 4 blocks. All the 4 blocks you need to study for the first semester. And again, the soft core papers are having 3 blocks. All those 3 blocks you have to study for your examination for your first semester. And then, now, dear students, talking about the Indian financial system, first of all, let me tell you that the Indian financial system happens to be a theory subject. It has 3 blocks. Each block is having 4 units. Okay, so this will complete your entire syllabus for first semester. Now, dear students, starting with the concept of Indian financial system, please keep in mind finance is the lifeblood of any organization. Now, what you people need to keep in mind is whether an organization is big or whether the organization is small, every organization needs finance for its existence. Okay, and now what you need to keep in mind is the economic development of any country will very much depend upon the existence of a well organized financial system. That means to say, dear students, if you say that any country, the economic situation of a country is doing well, it means to say that the financial system in that country is doing good. So that is why the economic development of any nation depends upon the existence of a well organized financial system. And dear students, now when you use the term financial system, there are many concepts that have been included. Okay. Now the financial system is a very broad concept. Now, financial system means it can include financial assets, it includes the financial markets, it includes financial intermediaries, and so on. That means to say the term financial system is not a very narrow concept, but on the other hand, it is a very broad concept, and this broad concept basically includes financial assets, the financial intermediaries, okay, financial markets. All these together constitutes the financial system. Now, dear students, let us start with the first concept under financial system, that is about the functions of the financial system. Dear students, as I just now mentioned to you, see, finance is considered as a lifeblood of any organization, and without having finance, none of the business organizations can survive. Okay, and what is the basic idea of having this financial system is that firstly, provision for liquidity. Dear students, what do you mean by this term liquidity? Liquidity means easy convertibility into cash. That means to say, see, there must be free flow of cash in the economy. The term provision for liquidity means to say, dear students, today, because of the presence of the financial system, you can think of having the concept of liquidity. Okay, like for example, you know that commercial banks are very much existing. Now, what do these commercial banks do? Of course, the banks are also a part of the financial system. Now, because of the existence of the banks, there is free flow of money. That is, every day the banks will be accepting deposits, they will be lending loans. So, what is happening? There is a provision for liquidity. And, dear students, liquidity is nothing but easy availability of funds in the form of cash. So, the first very important function of the financial system is about the provision for liquidity. And the next concept, dear students, it is about mobilization of savings. What do you mean by this mobilization of savings? Dear students, mobilization of savings means to say that now see, all of us will be having money, but in case there was no banking sector, just imagine if the banking sector was not existing, then what was happening? All the money that you are earning, dear students, it would have got remained idle. That means to say, now let us say you are having 10,000 rupees with you. This 10,000 rupees that you're having with you, if you put it in a box, okay, and just leave it for some months or some years, it will definitely not multiply. Whatever money you have kept, the same money is going to remain there, right? So what will happen? It will not multiply, it will not increase, it will not decrease. So what I'm trying to tell you is, but because of the existence of the financial system, now as I told you, for example, the commercial banks happens to be a part of the financial system. The banks will collect your funds. They will collect your funds in the form of deposits, dear students. So that is why it is helping in mobilization of savings. So what is the banking system doing? They are able to collect the money from you, and once they collect the money from you, they are in a position to mobilize the savings of the public. And dear students, that is about mobilization of savings. And the next point is about size transformation function. All these aspects which I'm discussing is very much there in your study material, dear students. Now, size transformation function in the sense, now see, there are millions and millions of people who are there in the country. Now, what the financial system will do is, that means to say, now let us say a bank, it is going to collect the savings of millions of people. So when it collects the deposits of a large number of people, it will also be in a position to lend loans to the people, right? Now see, let us say 10,000 people have deposited money today in SBI bank. From the money that they have collected in the form of deposits, the SBI bank will also be able to give loans to the people who are in need of money. So what I'm trying to tell you, dear students, is that size transformation function is also carried out by the financial system. That means to say, it is going to accept the deposits from millions and millions of people, and it is also going to use that money for giving loans to a large number of people. That is the idea, dear students, of having a financial system. And then, dear students, when it comes to the next point, it is called as maturity transformation function. What do you mean by this maturity transformation function? Now, this is nothing but, now let us say, dear students, some of you would have deposited in fixed deposit account. You people have deposited money in a fixed deposit account. You people have deposited money in a fixed deposit, and that fixed deposit will have a maturity period. Now let us say you have invested that money for a period of 5 years time. Now when you invest money in a fixed deposit account for 5 years, the bank knows very clearly that you cannot demand that money before 5 years. Okay, so it means to say that money is available with the bank for a period of 5 years. Now, what the bank is going to do, it is going to use that money which is available with it for a period of 5 years. Rather than keeping it idle, it is going to lend money to the other people who are in need of money. So, what I'm trying to tell you is maturity transformation function is nothing but, dear students, it is mainly concerned with accepting some fixed deposits from people who want to deposit the money, and they're going to lend that money to the people who are in need of money, and that is why they are trying to transform the maturity function. Okay, that is another function of the financial system. And dear students, the last point which you have here is about the risk transformation function. So when it comes to this risk transformation function, this is nothing but, now all of us know that, dear students, when it comes to the share market, now I think you people have heard about share market. Now in the share market, there is lot of risk involved. Why is there a lot of risk involved in the share market? Because it is subject to the market risk. But dear students, what you people should keep in mind is that because you are very scared to invest in the share market, what you can do is you can take the help of financial intermediaries. Like for example, there are some financial experts are there, okay, like the brokers. What you can do is the small amount of money that you're having with you can think of giving that money to the brokers. They will collect the money from you and they will try to put it in different investment avenues which will be having some extent of safety. Okay, so you will also be happy that yeah, the money that I have invested in is actually safe because I have given the money to an expert who will be safeguarding my money. So, dear students, what you people should keep in mind is that whenever it comes to the financial system, only because of the existence of the financial system today, we are all in a position to, minimize the risk. Dear students, as I already told you, there is some network issue. I'm not able to share the screen, but don't worry about the presentations because all the PPT will be sent across to you on the last day. Kindly concentrate on what I am telling you. Okay. So now, dear students, we had started with the concept of financial system. I told you that finance is the lifeblood of any organization. So without finance, none of the business organizations can survive. And then we started with the functions of the financial systems, dear students. When it comes to the functions of the financial system, we have provision for liquidity, we have the concept of mobilizing the savings of the people, you have shared transformation function, maturity transformation function, and the risk transformation function. Now, dear students, coming to the next very important concept, you should know this very clearly. What is that? It is with regard to what all are the various components of the financial system. This is a very, very important concept, even from your examination point of view. Dear students, when you use the term financial system, it basically includes financial assets, financial markets, financial intermediaries, financial rate of return, as well as financial instruments. So these five components together is called as the components of the financial system. Now, dear students, let us start one by one and let us try to understand what each of this is. Now, I told you the first one, which is called as a financial asset. Now, dear students, please keep in mind there is a distinction between a physical asset and a financial asset. Okay, like see, for example, fixed assets. Now, let us say a land and building. You may be having land and building with you, you may be having gold, silver with you. They are all physical assets. Okay, the physical assets cannot be used for further production of goods or for earning income, but when it comes to financial asset, it can be used for further production of income. Okay. For example, dear students, see, when you use the term shares, okay. Now, shares are there, bonds are there, debentures are there. All these are examples of financial assets. A financial asset is one which can be used for creation or transfer of another financial asset. Okay, so please keep in mind, dear students, the first very concept of the financial system is the financial assets. And as I already told you, there is a distinction, dear students, between the physical assets and the financial assets. When you use the term physical assets, as I told you, it basically includes machinery, land and building. It can be the gold that you're having, the silver. All this is a part of physical assets. Okay, but financial assets is in the nature of shares, bonds, debentures. Okay, these are all called as the financial assets, which helps in generating income, regular income to the people. Okay, and dear students, coming to the next and the very, very important concept, it is called as the financial market. Now, what do you mean by this financial market? Very important, dear students. See, basically, when you use the term financial markets, it means, of course, a place where buying and selling takes place, right? So, generally, when you use the term market, what does the term market means? Market means, of course, the place where buying and selling takes place. But because it is a financial market, wherever a financial transaction takes place, it is called as a financial market. Okay. Now, dear students, when you talk about the financial market, please understand this financial market is very, very important for you, because the other topics which you are going to learn in the future topics will all be linked with this financial market. So, dear students, as I already told you, please keep in mind when you use the term financial system, it will include different concepts, and out of the different concepts, one very important one is the financial market. Wherever the financial transactions takes place, it is called as a financial market. But dear students, what is more important in this financial market is that you have got two classifications under the financial market. Okay, one is called as the organized market, very important for the examination. One is called the organized market, and the other one is called as the unorganized market. Now, dear students, what do you mean by this organized market, and what do you mean by the unorganized market? Now, dear students, please keep in mind, you might have heard about money lenders. From many, many years ago, or from many decades, there are money lenders. Okay, like private money lenders are there. Okay, some indigenous bankers are there. Now, these money lenders, they do not come under the control of any regulatory body. There is no RBI, there is no SEBI, which is actually giving any guidelines for this unorganized sector. So, when I tell you the unorganized market, it means to say the private money lenders, the indigenous bankers who do not come under the rules and regulations of the Reserve Bank of India. Okay, and please remember they are called as the dealers in the unorganized market. But, dear students, when you use the term organized market, there are standardized rules and regulations will be there. There will be rules and regulations which will be given by the Reserve Bank of India, or it can be any other regulatory body. For example, SEBI is also a regulatory body, AMFI is another regulatory body. So, in the organized market, what you people should keep in mind is that there are standardized rules and regulations which have to be followed in the organized market, and it will be under the strict rules and regulations of the RBI or any other regulatory body. That is another important concept. Now, dear students, I told you about the organized and the unorganized market. I hope all of you are understanding about the organized and unorganized market. So, once again, a repetition. See, organized market means a market which is under the strict rules and regulations of RBI. There will be some standardized rules and regulations will be there. Okay, and they cannot do things according to the will and wish, because there is a regulatory body which is watching their activities. But when it comes to the unorganized market, dear students, please keep in mind, in the unorganized market, they do not have standardized rules and regulations. It will be not governed by RBI or any other regulatory body. Okay, so dear students, I hope you are understanding. Now, coming to a very, very important part of this organized market. Dear students, there are two types of classification under the organized market. Let me tell you once again, it's very, very important for your examination. Under the organized market, you have two classifications. One is called as the capital market, and the other one is called as the money market. So, very important, dear students. So, in the organized market, that is in the market where there is strict rules and regulations, where there is a regulatory body that is existing, under that organized market, you have two main classifications. One is called as the money market, and the other one is called as the capital market. Dear students, first let us learn about the money market, and later on let us go to the capital market. Now, I've been repeatedly telling you that there is some problem in uploading the PPT. I'm not able to share the screen. So, kindly listen to what I'm telling you right now. I will share the PPT to you. Don't worry about the presentation. Okay, now let us start with the money market. Dear students, please keep in mind money market is a market which deals with financial assets which has a maturity period of up to 1 year. So, main thing that you people should remember in case of the money market is that, dear students, money market is a market for a very short term maturity. That means to say, any securities that have been dealt in the money market, they are for a very short period of time. What do you mean by a short period of time? Short period of time is from 1 day to 1 year. So, the securities that have been traded in the money market will have a very short maturity period. It may be from 1 day to up to 1 year only. That is the maturity period of money market. And then it is a market for purely short term funds. Main thing you should remember in the money market, dear students, it is a market purely for short term funds, and in this market the securities have been traded basically for a period of up to 1 year. Okay, and RBI defines money market as a market for short term financial assets. Okay, so now let me tell you in detail about the features of the money market. As I already told you, money market purely deals with the short term funds. Short term funds means, as I told you, the period of maturity of this will be within a period of 1 year. And in money market, dear students, please keep in mind the transactions will take place without the help of financial intermediaries. That means to say, the brokers, agents, they will all not exist in the money market. So, in the money market, there will be absolutely no role of the financial intermediaries. Okay, so one thing, it has short term maturity financial instruments will be dealt in the money market, and it will take place without the help of the financial intermediaries. And dear students, transactions in the money market usually takes place over telephonic conversation. Okay, just with the help but for a very short period of time. Okay, and please keep in mind it is a very important source of financing trade and industries. Now, dear students, let me tell you one simple example about this concept of money market. See, there is one particular money market instrument which is called as a treasury bill. Now, this treasury bill, dear students, it is also called as the T bills. Okay. Now, this treasury bills, in this treasury bills, what is going to happen is that the government is going to issue this treasury bills to the public. Now, when these treasury bills are issued to the public, first of all, one thing you need to remember, dear students, is the worth of each of the money market instruments will be very high. Okay, like see, in capital market, the value of the instruments will be very low. That is, we people can easily afford. But in money market, one more very important thing that you people should remember is that the value of each of the instruments will be very high. For example, it may cost around 2 lakh rupees, 5 lakh rupees will be the worth of each of the instruments that have been traded in the money market. So, dear students, what you need to keep in mind is I was telling you about the treasury bill. What the government will do is, now let us say government wants to raise some amount of money. There is some deficit in the budget of the government. They want to raise some amount of money. What the government will do is they can think of issuing this treasury bills. When the government issues this treasury bills, dear students, let us say the public is going to purchase these treasury bills. And these treasury bills will be having a very short term maturity. As I told you, any money market instrument will be having a short term maturity. Now, what the government will do, it has raised this huge amount of money from the public. It will take that money, make use of that money for some developmental purposes. That means to say, let us say for the construction of roads, it may be for the construction of hospitals, flyovers, etc. The government will make use of that money for that shorter period of time. So, what I'm trying to tell you is money market instruments play a very important role in the economic development of the country. So, as I just now quoted an example, the government can also think of raising money from the money market through the issue of treasury bills. When they raise money with the issue of treasury bills, dear students, they will make use of that money for the development activities of the nation. Okay, so that is why money market plays a very useful important role for the economic development of the country. And not only that, dear students, now let us say there are so many commercial banks that you people know. Now let us assume State Bank of India, it is having crores of rupees with it, let us say, on a particular day. Now, if it is having so much of money, rather than keeping that money idle, the commercial bank can also think of investing that money in money market instruments. Why? Because once they invest in that money market instruments, they will be fetching a very good returns. So they can get the returns rather than keeping the money idle. So even the commercial banks can park their surplus funds, whatever surplus money the commercial banks are having, instead of keeping it idle, they can definitely think of investing that money in the money market instruments. Dear students, I hope you're understanding. Please keep in mind, I told you that there are several components in the financial system. Out of the various components in the financial system, the first thing that we have is the financial assets. I told you what a financial asset is. After that, we started with the financial markets. Dear students, please keep in mind when you use the term financial market, it means to say it is a place where financial transactions takes place. And I also told you that there are two main classifications under the financial markets. You have the organized market and the unorganized market. So, dear students, unorganized market means these markets will not be having any type of strict rules and regulations by any regulatory body. They will be functioning according to their will and wish. That means you cannot have RBI or any other regulatory body interfering. But, dear students, when it comes to the organized money market, all of you, please keep in mind that in the organized money market, there are standard rules and regulations. RBI or any other regulatory body will be governing the activities of the organized market. And dear students, in this organized money market itself, okay, you have what is called as the yes, in the organized money market itself, you have the organized market, you have the money market as well as the capital market. So we were talking about the we were talking basically about the money market. I told you that money market is a market for a short term period, that is its maturity period will be from 1 day to 1 year. Okay, so that will be the maturity period of money market instruments. And I also told you that commercial banks can invest a huge amount of money. Okay, whatever surplus money they are having, they can definitely think of investing that money in the money market instruments. Okay, and dear students, apart from this, now let us go to the other concept, which is called as the capital market. Now, when this treasury bills are issued, now, coming to the capital market, dear students, now in this capital market, what you need to know is capital market is basically a market for long term securities. Okay, so as I told you, money market only short term securities will be issued from period of 1 day to 1 year. Hello, ಕೇಳಿಸ್ತಾ ಇದೆಯಾ? ಕೇಳಿಸ್ತಾ ಇದೆಯಾ ನೋಡಿ? ಇದೆ ಅಲ್ವಾ? ಹಂಗೆ ಅಲ್ಲೇ ಇರಿಪ್ಪ, ನೀವು ಇದು ಮಾಡ್ಬೇಕು, ಗೊತ್ತಾಗಲ್ಲ ಇಲ್ಲದ ನನಗೆ. ಓಕೆಪ್ಪ, ಓಕೆ ಓಕೆ. So capital market is basically a market for long term securities. Okay, so here, dear students, the borrowing and lending will take place for a longer period of time. That is one thing that you should keep in mind. But dear students, please keep in mind another important point is that in the capital market, the price or the value of each instrument will be very, very less. That means to say, see, it may be worth 100 rupees. I think you people have heard about shares, very popular concept. See, whenever shares have been issued by any company, now there will be companies which will be issuing the shares at the price of rupees 100 per share. So 100 per share means all of us can think of investing money, right? So what you need to keep in mind is in the capital market, the value of each of the instruments will be very less. It is not like the money market. So in the money market, the value of the instruments will be very, very high. And dear students, capital market acts as a link between the savers and the borrowers. Okay. Now see, I think you people have heard about companies issuing shares. When the company issues shares, what is the idea of issuing shares? They want to raise huge amount of capital. Okay, now let us assume they want to start the company, that is why they're raising money. Or let us say for the expansion or diversification activities, they're thinking of raising money. Whatever may be the reason for raising funds, but dear students, it capital market is acting as a link between whom? The saver and the borrower. That is, the company is the borrower here. They are going to issue shares to the public. When the public purchase the shares, they will be getting huge amount of money, and that is why with the help of that money they can think of starting the business or for expanding and diversification activities. And then, dear students, see, capital market is basically a market that deals with medium term and long term sources of funds, but definitely it does not deal with short term sources of finance. And then, dear students, one more very important point is capital market will always operate with the help of intermediaries. I told you that in the money market you will not be having any type of intermediaries, but in the capital market, the brokers, the sub brokers, they all play a very important role in the capital market. So dear students, I hope you're understanding. So the capital market, it operates with the help of intermediaries. It basically deals with medium term and long term sources of funds, and capital markets are regulated by regulatory bodies. Okay, so that means to say RBI, SEBI, they play a very important role. Even certain government rules and regulations will be there in order to operate in the capital market. And dear students, capital market instruments are highly liquid in nature. Okay. Now, see, you have purchased the shares of a particular company. Now, when the price of the company shares goes up, let us say you want to sell it off, you can definitely sell the security which you have purchased in the secondary market, and you will be in a position to get back the money. So in the capital market, dear students, it is very highly liquid in nature, so you can think of selling the securities that you have purchased and you can make huge amount of money. And dear students, the foreign investors can also invest in the Indian capital market. Now, let us say an Indian company is issuing the shares. It is not that only the Indian investors can invest money there. No, even the foreign investors can think of investing money in the Indian company's shares. So, what is happening? The money is flowing not only from the national market, but even the foreigners are also investing huge amount of money. So, with the help of that money, you can think of starting companies, you can think of expansion, diversification, and so on. Now, dear students, coming to the importance of the capital market, capital market plays a very important role in mobilizing the savings of the people. Yes. See, now when you're having 10,000 rupees with you, what you can do is instead of keeping that money idle, you can always think of, say, putting that money. Now, let us say you people can purchase the shares of the company. Now, today you have purchased the shares at the price of 100 rupees per share. Okay, but tomorrow, when the price of the shares goes up to maybe 200 rupees or 250 rupees, you will be in a position to make some profit. So that is why the capital market plays a very important role in mobilizing the savings of the public. And dear students, capital market provides an avenue for the investors, that is the household sector. You can think of investing your money, and capital market increases the productivity. How does it increase productivity? Now, as I was mentioning to you, whenever a company raises money with the issue of shares, when the public invests the money in the shares, the company will be getting what? Money that they can be using for carrying out their production activities. Okay, so that is why capital market helps in increasing the production activities. Okay, and it also provides an important source of finance for the industrial sector. Yes, even industrial establishments are able to develop because of the money that they raise from the capital market. And dear students, a well developed capital market acts as a barometer of the economy. That means to say, in case the capital market is functioning well in the economy, it means to say that it indicates the economic situation of your country is good. Okay, and as I told you, see, a capital market will be in a position to raise money not only from the people of your own nation, but also from the people of the other nation. That is, the foreign investors can also deposit huge amount of money into the capital market. Okay, see, through the media, public become aware of the different types of securities. Yes, see, whenever a company wants to raise money in the form of shares, dear students, they give a prospectus. I think you people are aware of a prospectus. Okay, just like when you get admission to your MCOM, like the way in which you got a prospectus, similarly, a company will issue a prospectus to the general public, giving details about, okay, the price of the shares, okay, and the details of the company, what type of company they're going to start, and all that. And that advertisement will be given in the newspaper, television, etc. So, with the help of this, what will happen? People will become aware of this and they try to invest more and more money in purchasing the shares of the company. So, the company is getting money for carrying out the production activities. On the other hand, the people are also getting a place to invest their money so that they can earn some returns in the future. So, dear students, and I also told you, capital market is a market for long term funds. Okay, it is not like the money market where the maturity period is for a very short period of time, but it is basically with regard to those instruments which has a maturity period of more than a year. Okay, it can run for many years as well. Okay, so the capital market plays a very important role because it is helping the companies also to raise money and carry on the production activities, and on the other hand it is helping the general public also to invest their money so that they can reap some returns in the future. So dear students, even when it comes to the share market, see, it may be subject to the market risk, but what you should keep in mind is whatever money you invest in the share market, if you leave it for a longer period of time, definitely you will be in a position to get very good returns. Okay, so that is one thing that you people should remember. Now, dear students, this is one very important question which you can consider for your examination. That is, what is the difference between the money market and the capital market? Very important. Okay, now I've already told you about the money market. I also told you about the capital market. So I hope you people will be able to easily understand the differences between the money and the capital market. Dear students, first of all, the transactions that takes place in the money market are informal in nature, but the transactions that takes place in the capital market are formal in nature. That means to say, see, basically what will happen is, now I told you that the transactions in the money market can happen over the telephone also, but when it comes to the capital market, you cannot do that, because I think you people have heard about the stock market. Okay, the stock market is a part of the capital market. The stock exchange is a part of the capital market. So there is a formal place for the capital market transactions. And dear students, in money market, which are the types of instruments that are dealt with? There are instruments called as commercial papers, treasury bills, certificate of deposits. These are some of the instruments that are dealt with the money market. But when you come to the capital market, dear students, you have shares, bonds, debentures. Okay, these are the instruments that have been dealt in the capital market. And again, coming to the money market, commercial banks, non banking financial companies, central banks, okay, they all play a very important role. They are the major players in the capital market. But when it comes to capital market, you have stock brokers, insurance companies, commercial banks, underwriters. They are the players in the capital market. And then, dear students, money market are highly liquid in nature. Highly liquid means to say, see, there are some instruments called as money at call and short notice. This is one instrument in the money market, dear students. Here, what happens in this money at call and short notice is that even within a single day's time, the investment what you make, okay, that can be called back. That means the maturity period I told you in a money market instrument, it is from 1 day to 1 year. So even 1 day also is the maturity of a money market instrument. So they are highly liquid in nature. But when it comes to capital market instruments, yes, of course, it is, liquid in nature, but comparatively, it is called as less liquid compared to money market instruments. Okay. And then, dear students, the instruments that are dealt in the money market has a maturity period of less than 1 year, but the instruments dealt in the capital market have a long term maturity. Okay, and the money market, what is the aim of the money market? The aim of the money market is to increase the liquidity of funds in the economy. But in the capital market, the idea is to mobilize the savings of the people, so that once they mobilize the savings of the people, the companies can use those money for carrying out the productivity activities. Okay, and dear students, please keep in mind this is again a very very important concept for the examination. That means to say you need to know the difference between the money market as well as the capital market. Okay, so I hope you're understanding. Firstly, the financial market has the organized market and the unorganized market. So under the unorganized market you have the money lenders, the indigenous bankers, etc., who are not controlled by SEBI, RBI, or any regulatory body. But when it comes to the organized financial market, here you will be having strict rules and regulations. The RBI and other regulatory bodies will be there. On the other hand, in the organized market, you have a money market and the capital market, dear students. Just now I mentioned to you the difference between the money market as well as the capital market. Now, dear students, coming to another very important aspect. Okay, now I was telling you about the capital market. I told you that the capital market will help in the economic development of the country, right? Now, after telling about this, you need to know that in this capital market itself, you have another very, very important classification. You have the primary market and the secondary market. Okay. Now, dear students, just now you are only learning about what do you mean by money market, what are the functions of the money market. Then you learned about what is a capital market, why is the capital market important, and so on. Okay. And I also told you that financial market is a very important center which facilitates the buying and selling of assets, right? And the participants in the financial markets, many participants will be there, and here a lot of financial transactions will be happening. Now, dear students, there is one more very important concept that you need to know, that is about the primary market and the secondary market. This is again very very important from your exam point of view. Okay, so please keep this in mind. You need to know what do you mean by a primary market and what do you mean by the secondary market. Okay, now dear students, please keep in mind a company, let us say a company or some private sector. Now, you know, LIC, okay, Life Insurance Corporation of India itself is planning to introduce this IPO. That means they want to go in for issuing of shares to the public. Now, what will happen in the primary market is that, dear students, when the shares or the securities have been issued for the first time, or when it is issued newly, it is called as the primary market, because the primary market is concerned with the issue of new securities. Companies, government, public sector institutions, they can think of raising huge amount of money through this primary market. I hope you're understanding. When there is raising of money for the first time, when it is newly issued, as I told you, if a company wants to raise money, they will think of issuing of shares. When they think of issuing the shares for the first time, what happens that a transaction will take place in the primary market. Okay, but when it comes to the secondary market, dear students, already issued shares will be traded. Like, I think you've heard about the stock exchange, you've heard about the stock market. Stock market is nothing but the secondary market. So primary market means when the shares are newly issued by the company or by the government. When it is newly issued, it is called as a primary market. But when the trading takes place later on, that will be called as the secondary market. Now, dear students, I told you that one company, they are thinking of issuing the shares to the public. The idea is to issue shares to the public so that when the public will purchase the shares, the company will be able to get huge amount of money. With the help of that huge amount of money, dear students, they want to set up that company. And what will the public get by investing in the shares? Please keep in mind, when the public invest money by purchasing the shares, they will be called as the shareholders of that company. And dear students, the shareholders are the actual owners of the company. That means to say, now let us say one ABC company limited will issue shares. Okay, now you people go and buy the shares of that company. When you buy the shares, the money what ABC company will get, they will use that money for carrying out, for starting the business. But what you will do by with the help of the shares, once you purchase the shares, you are like the owner of that company. Okay, and on the other hand, whenever the company makes a profit, they will be declaring something called as dividend to each of the shareholders of the company. Okay, because no one is going to invest money freely. Okay, you're investing money because you want something in the form of returns. So dear students, please keep in mind, when the shares are issued for the first time, it happens in the primary market, and the secondary dealing in the transactions happens in the secondary market. Now, you need to know that in the primary market, dear students, there are three main functions that are performed. Okay, so in which market? In the primary market. Now, which are the three main functions? One is called as origination. Okay, the primary market mainly deals with the securities that are not traded. It is a market for new issue of securities. Okay, during this origination stage, what happens is assessment of the project viability is done. That means I was telling you about the ABC company. Now, when they want to issue the shares, first they go for a very important function called as origination. In this origination, they will see about what type of company we are thinking of starting. If we start this type of a company, will it really be profitable or not? All that they need to see, and they will see that in the origination stage. Next, another important function is that it is called as underwriting. Dear students, what do you mean by this underwriting? It's a very important concept. See, underwriting is nothing but, now, when this ABC company thinks of issuing shares to the public, it is compulsory that a certain percentage of their shares should be compulsorily purchased by the general public. Okay, what is the rule? Now, I told you ABC company is thinking of issuing shares to the public. The rule is that you can issue shares to the public, but when you issue shares to the public, a certain percentage of the shares should be compulsorily purchased by the general public. Now, let us assume if the certain percentage of the shares is not purchased by the public, what will happen? Now, same advertisement they will give, and they will also try to persuade the people to purchase the shares. But if a certain percentage of the shares, that which is called as minimum subscription, if that is not purchased by the general public, then they cannot think of starting the company. So that is why that ABC company will enter into agreement. Hello. Okay, okay. So what the company will do is, firstly they enter into an agreement with the underwriters. Okay, so who is an underwriter? See, this underwriter is a person, he will take up the responsibility that if that minimum amount of shares is not purchased by the public, the underwriter will purchase that unsubscribed shares. Okay, I hope you're understanding. Please keep in mind, underwriting is nothing but ABC company, which I was telling you in the example. They, when they issue the shares, a certain percentage of it must be compulsorily purchased by the public. If it is not purchased by the public, they cannot think of starting this company. So, what this ABC company will do, they will enter into an agreement with the underwriter. What the underwriter promises is that he tells the company, if that certain percentage of shares is not being purchased by the general public, that portion will be purchased by the underwriter. That is called as underwriting agreement. And dear students, later on, they think of distribution stage. So in this distribution stage, it is nothing but now once the underwriting agreement is entered into, they can think of issuing shares to the public. And once they issue the shares to the public, of course, definitely the company will be getting huge amount of money for starting the company. And the people who have purchased the shares will become the shareholders of the company. Okay, so dear students, I hope you're understanding. See, you have two types of market. One is the primary market and the secondary market. So primary market is the market wherein the securities are issued newly for the first time. And in this primary market, you have three main function. One is called as the origination, one is called underwriting, and the next one is distribution. All these points are very much there in the study material, dear students. Okay, and then coming to the secondary market, dear students, the secondary market again is very important. See, in this Indian financial system subject, yeah, secondary market is one of the very important concepts, because without understanding the secondary market, you cannot understand the further chapters at all, because everywhere the term secondary market will be used in IFS. Okay, so you need to know about this secondary market. Now, dear students, first of all, secondary market is a market for those securities which have already been issued in the primary market. So now this ABC company has already issued the shares for the first time. People purchased the shares, the company got the money, they started the company, and so on. Now, next, now let us say you have purchased the shares of this ABC company. You want to sell the shares. Where can you think of selling back the shares? You can think of selling the shares in this secondary market. And dear students, the secondary market is nothing but the stock market. It is nothing but the stock exchange. Very important. Okay. Now, first of all, what is this features of the stock exchange? It is a market for securities, of course. Stock exchange, which is called as the secondary market, is a market where the securities have been bought and sold. See, first time when that ABC company issued the shares in the primary market, there will be a time period, generally for a period of 1 month. Okay, so during that 1 month period, which is called the IFO period, that is the initial public offer period. During that 1 month period, they would have thought of issuing the shares for the first time. Okay, people who want to buy can buy there in the primary market. Now let us say later on, okay, after that 1 month's period, if you want to buy the shares of that ABC company, or you want to sell off the shares which you have purchased of ABC company, all that can happen only in the secondary market. And the secondary market is nothing but the stock market. And dear students, please keep in mind, it deals with second hand securities. Second hand securities means the securities which are already issued in the primary market, they can be traded in this secondary market. Okay, and dear students, please keep in mind, generally with regard to the trading that takes place in the secondary market, it happens with the help of authorized dealers. Who are these authorized dealers? You must have heard about the brokers in the stock market. Yes, these brokers are the authorized dealers. Now, you cannot buy and sell directly in the secondary market, dear students, that is all the stock exchange. What you need to do is you have to contact the authorized dealers. The authorized dealers is nothing but the stock agents, the stock brokers. These brokers will help you in buying and selling the securities in the secondary market. Okay, that is again one more important point. And dear students, generally what happens is, now ABC company, now after this initial public offer period, if they want the buying and selling of their securities to take place, they have to follow one very important, I mean, aspect. They have to list their securities in the stock market. List the securities in the stock market means to say, dear students, the name of that company has to be listed in the stock market. Only then, that means there are so many procedures which are involved in listing of securities. You need not worry about that. But their securities should be listed in the secondary market. Only then the buying and selling can happen in the secondary market. Okay, so dear students, I will just continue from we will get back at 2 o'clock and I will continue further on. Thank you very much.